Hello, this is Jordan, and this video is being recorded on the evening of Tuesday, December 18th, 2018. And in this video, I'm going to discuss the immediate and near-term outlook for the stock market and how that may impact gold. Okay, so starting off here at the very bottom, there's a chart of the S&P 500, and this is kind of messy, but in this chart, I've plotted 5 different indicators which help me define an oversold extreme for the stock market. So starting off, we have the VIX, the put-call ratio, the number of new 52-week lows, the percentage of stocks that are trading above the 50-day moving average, and then we have the new highs minus new lows, smooth with the 10-day moving average. And we smooth the put-call with a 5-day moving average. So in addition to technical support and those types of levels, we also want to look at these types of indicators because they can help us define when the market has reached an oversold extreme. And in recent days, we've been saying the market isn't that close to an oversold extreme. There's still downside. And the bottom 2 indicators that we mentioned, those are hitting an extreme. But if you look at the top 3, the VIX, the put-call ratio, and the number of new 52-week lows, those have not yet hit an extreme. But especially with the VIX and the new lows, those are things that can hit an extreme very quickly. I mean, that can happen in 1 day or 2. The put-call ratio, that's starting to rise, so that's going to hit an extreme at some point. So we're not quite there yet. And also, if you look at just the price action, and you can't really see it at the bottom because there's not enough space there, but the S&P 500 has broke down. The end of last week, it broke down from, you can call it a bear flag or a rectangle or a triangle. And so it's in breakdown mode, and it's in search of technical support. So I'm still looking for more weakness in the S&P 500. However, when these indicators hit extremes, and I don't think it's going to take that long. I mean, it may only be a couple days. It may be another week. I'd be shocked if it was more than a week or 2. When that happens, the stock market is going to be setting up for, at worst, a good relief rally, probably a sustained relief rally. You know, something that's going to last not days, but weeks, and perhaps even several months. And the question is, how might that impact gold? And so we're looking at, in this chart, we're looking at gold at the top and gold against the S&P 500 at the bottom. At the top, that's a daily candle chart. And gold is approaching a confluence of strong resistance in the 1260 to 1270 level. Gold closed today, if we round it up, it closed at 1254. But if we look at this band of moving averages, we can see they're all in the 1258, 1266, 1273, but let's just call it 1260 to 1270. I mean, the 200 days at 1258, the 400 days at 1273, the 600 day, and that's a moving average that actually supported most of gold's lows over the last 2 years, except the one in December 2016. So that's been an important moving average. That's at 1266. So 1260 to 1270 is really the resistance that we're looking at. And you know, despite the good action that we've seen in precious metals in recent weeks, gold has not been able to take out this resistance. So gold and the precious metal sector, it could be setting up for a post-Fed sell-off or at least some kind of a retracement, because the Fed pause, I mean, the market's been talking about it for several weeks. It's already discounted in the market. So we would need the Fed to say something even more dovish in addition to the overall pause, because that's already been priced in. But so the real issue going forward is, if the S&P 500 is not that far, I mean, maybe, like I said, maybe it's several days or a week away from starting a relief rally that probably could last for a couple months or even several months. How is that going to impact gold? Can gold and precious metals hold up in that environment, or are they going to sell off again and head down towards the 2018 lows? I have some opinions, but I really don't know. We have to wait and see how gold and the gold stocks are going to react in that kind of environment. because that kind of environment, it's bullish for the stock market, not bullish for precious metals. But if precious metals can go sideways and hold up really well, then that would be very bullish and kind of imply that when the stock market makes another leg down, that could be when precious metals really begin this bull market. And I've been saying, we really need a rate hike for that to happen. So we'll see. But talking about gold against the stock market, I plotted that ratio at the bottom, and that ratio has broken above the 400-day moving average for the first time since the fourth quarter of 2016. It was trading above it for most of 2016. Then in November, it fell below it. So you can see the 400-day moving average for that ratio has been very significant dating back to the second half of 2015. So gold is making a lot of progress in real terms. However, I really want to see this ratio it close at 0.49. I want to see it take out those 2017 highs around 0.54. So can this ratio rise another 10, 12%? That would put it at about a 2-year high. So that would constitute a major breakout. So we've seen a lot of progress in the last couple months, but is the strength in this ratio going to continue over the next month or two? I don't think so, because sure, it could pop some more over the next week, but the stock market is setting up, like I said, it's setting up for a counter trend rally, a relief rally that could last several months. And so that would presumably affect this ratio and push it back down again. I think the low is probably in. I don't think it's going to go back to new lows, but the reality is we still need to be patient, and there may be some more time needed for gold to begin this bull market and really reassert itself and break out in that bottom ratio and break out against the stock market. So with all that said, that's it for this video. You can follow all my work at thedailygold.com. Consider my premium newsletter there. It's only $149 for 6 months. Visit thedailygold.com/premium. We focus on market timing and stock selection in the juniors. And I'd love to have you on board as a subscriber. Thank you so much for watching the video. I really appreciate it, and I look forward to publishing another video update for you in the weeks ahead.